Back in the early 1800s, things were crazy. Banks could do whatever they wanted with your money, and sometimes that meant big trouble. In 1837, everything went bust. People lost their savings. Banks closed. It was a mess. Citibank was just a young bank back then, and they got caught in the middle of this chaos. People got scared and rushed to take their money out, leaving Citibank with barely anything left. The bank needed a hero, someone to save them. That's where Moses Taylor comes in. This guy wasn't your typical fancy banker. He started working on the docks as a teenager and built his success the hard way. He didn't like taking risks with money. Playing it safe was his motto. Now he had a big job: turn this shaky bank into a strong one that wouldn't crumble if another crisis hit. Let's see how he did it. In a world where trust was as rare, Moses stood out like a beacon. Guess who noticed? Jacob Astor, the OG billionaire. The big cheese of Citibank had a hunch. He needed a leader to steer the ship, so he did what any savvy gazillionaire would do. He told the board about Moses, and voila. Taylor became the youngest bank president in history. But here's the twist. Taylor wasn't just pushing paper. He was rebuilding a sinking ship. Imagine it. Citibank, a Titanic with ledgers. If Moses flopped, it'd be game over for his rep, his savings, and his dreams of a beach house in the Hamptons. He bet his own fortune on the bank. Why? To show the world he meant business. And guess what? It worked. But Moses had a secret weapon: ready money. Sounds like a superhero catchphrase, right? Well, it kinda was. He kept stacks of cash handy. Why? Panic attacks. Moses was ready for financial fiascos. Fast forward 20 years. Moses turned Citibank's story around. Moses Taylor passed away in 1882 while still working, leaving the bank in a tough spot. The board of directors wasn't ready to find a new leader. They soon turned to his son-in-law, Percy Pyne, as the best option. Pyne had been Taylor's right-hand man, and became part of the family in 1855 by marrying Taylor's daughter, Albertina. However, Pyne struggled as president. He was careful and neighborly, but lacked marketing skills and the drive to expand the bank. Under his leadership, Citibank's progress stalled, and the board knew they needed a change to avoid losing the bank's success. After Pyne stepped down, a new leader emerged: James Stillman, a wealthy and tough businessman from the cotton and railroad industries, took charge. Stillman was known for his intimidation tactics and was far from a nurturing mentor. He ruled with an iron fist, showing no mercy for poor performance. Stillman was determined and energetic, aiming to make Citibank the top bank in America. To do this, he focused on attracting wealthy clients and had a plan to target just the right people. In the 1880s, Stillman joined forces with William Rockefeller, John Rockefeller's brother and a co-founder of Standard Oil. They served together on the boards of a railroad and a bank, becoming close friends. This partnership, along with the marriages of Stillman's daughters to Rockefeller's sons, helped propel Citibank into a financial powerhouse. Landing Standard Oil as a client was a huge turning point. It quickly elevated Citibank from a regional player to a national powerhouse. By 1894, just 4 years into his leadership, Stillman made Citibank the largest bank in America. With this milestone achieved, he stepped down as president and appointed Frank Vanderlip to take over, while Stillman remained as chairman. Vanderlip, who started as a journalist, brought a wealth of international experience to the role. He had big plans for Citibank's global expansion. But soon after he took charge, America was hit by the panic of 1907. Confidence in the banking system plummeted, leading to bank runs and a near 50% drop in the New York Stock Exchange. This panic caused widespread bankruptcies and financial chaos. In financial crises, human psychology plays a huge role. When things go wrong, people panic and rush to pull out their money, making the situation even worse. During this crisis, financier J.P. Morgan stepped in, using his own money and convincing other New York bankers to support the banking system, including Citibank. Many people turned to Citibank for safety, thanks to the solid foundation Stillman had built. For Vanderlip, the panic of 1907 highlighted the need for a central bank in America. He imagined a bank controlled by bankers that could step in during financial crises. It turned out, many American elites, including those in the government, were thinking along the same lines. Back then, America wasn't handling financial meltdowns very well, though a big-shot banker named J.P. Morgan set sail for Europe on a fact-finding mission. He wanted to see how those fancy Europeans dealt with money panics. They had central banks that could lend money to regular banks in a crisis. Morgan comes back with a head full of ideas, convinced America needs its own central bank too. Now here's the twist. To discuss this plan, he invites a bunch of important bankers to a super-secret meeting. We're talking cloak and dagger stuff. No last names, no dining together, the whole 9 yards. Why so secret? Apparently, they worried folks might think they were just rich guys scheming for their own benefit. But these bankers saw themselves as patriots, trying to fix America's wobbly banking system. The Federal Reserve, a brand new system to prevent future financial disasters by lending money to banks in tough times. Things are about to get rough for Citibank. Back in 1917, Russia was going through some major changes. People were fed up with the way things were being run, and a new communist government took over. This wasn't good news for Citibank's shiny new branch in Russia. The new leaders basically said, thanks but no thanks, and seized all of Citibank's money and property there. Gone. Just like that, tens of millions of dollars vanished. That wasn't the only trouble brewing. Down in Cuba, things were also going sour. The sugar industry, which was a huge deal for Cuba's economy, hit a major snag. People who borrowed money to invest in sugar couldn't pay it back, and banks, including Citibank, were stuck holding the bag. Citibank was in deep with Cuba to the tune of almost $80 million, a massive chunk of their money. All this trouble overseas was too much for the bank's leader, Frank Vanderlip. He threw in the towel and stepped down. The pressure was on to find someone who could fix these big problems fast. Stillman Jr., son of the famous Citibank leader. But unfortunately, Cuba just wasn't his thing either. Couldn't solve the mess, and the board of directors gave him the boot. With their backs against the wall, Citibank desperately needed a hero. Who would step up to the plate and save the day? Desperate for a solution, they find one man who stands out with an unexpected plan to resolve the Cuban crisis. Charles Mitchell. As the new leader of America's biggest bank, Charles Mitchell knows his success hinges on solving the Cuban sugar investment problem. The failures of his predecessors weigh heavily on him, highlighting the high stakes of his mission. So, Mitchell inherited this giant pile of bad loans in Cuba. What did he do? Well, instead of trying to make them profitable, he got a little creative. He basically created a whole new company, stuck all those bad loans in there, and then gave ownership of that new company to Citibank's shareholders. Poof. Just like that, the bad loans disappeared from Citibank's book. Mitchell basically moved the debt around, but hey, it worked. Now he could finally focus on growing the bank again. Fast forward a decade. America is booming. People have more money than ever before, and Mitchell sees this as a golden opportunity for Citibank. He wasn't like other bankers. He saw potential in everyday people, not just the rich guys. So Mitchell started offering new financial products to regular folks, making it easier for them to save and borrow money. It was a hit. By 1929, Citibank had hundreds of thousands of new customers. But here's the thing. Mitchell got a little carried away. In his quest for growth, Citibank started handing out loans pretty freely. He even pushed for lower interest rates, making it even easier for people to borrow. It felt like everything was going great, but beneath the surface, trouble was brewing. All this easy money and risky borrowing was building up to a major crash. Mitchell had no idea the party was about to end, and it was going to be a doozy. After years of reckless spending and easy credit, America was heading for an economic disaster. Bank stocks began to show signs of heavy recession, foreshadowing the trouble ahead. Things are not looking good for Citibank. Stock prices plummeted, businesses went bust, and people everywhere were losing money. Citibank, which had been lending out money freely, suddenly had a lot of trouble collecting what people owed them. Now they were relying on the Federal Reserve to bail them out. Their international business wasn't doing much better either. Almost all their branches were losing money, except for the one in China. which somehow managed to stay afloat thanks to silk trading. To make matters worse, the public found out that the bank's leader, Charles Mitchell, gave himself a huge bonus while the bank was struggling. Needless to say, people were not happy. Mitchell had to step down, and Citibank was left scrambling for help. James Perkins, friend of President Roosevelt, convinced the government to invest in Citibank, hoping it recover temporarily. However, World War II demanded massive funding, and Citibank became a key player, closely tied to the government. After the war, Citibank thrived, benefiting from the economic boom. Despite rising competition from other banks, Walter Wriston, an innovative leader, took charge. His bold risk-taking, like financing Aristotle Onassis's tankers, led to great success. By the 1960s, Wriston had transformed Citibank into America's second-largest bank. Wriston revolutionized banking by introducing ATMs, making Citibank the leader in convenience. Despite setbacks, Citibank continued to grow under Wriston's leadership. John Reed succeeded Wriston, advancing technologies and keeping Citibank as America's largest bank. The 1980s saw aggressive expansions, including Donald Trump's ventures, which led to financial troubles. Reed navigated these challenges, securing capital from Prince Al-Walid bin Talal. As 2020 approached, Citibank faced an even bigger storm. COVID-19 pandemic hit in late 2019, impacting businesses worldwide, including Citigroup. The bank had to set aside substantial provisions for anticipated loan losses. During this critical time, Michael Corbat retired and Jane Fraser took over as CEO. Jane Fraser, confident in her ability to transform Citibank, started streamlining operations. This involved laying off employees and reorganizing leadership. Citibank announced a simplified organizational structure, with leaders of its 5 interconnected businesses reporting directly to Fraser, part of the executive management team. However, even these measures weren't enough. Post-pandemic, Fraser noticed a significant decline in branch visits, leading to the strategic closure of consumer banking branches in the US and internationally. The shrinking middle class caused banks to shift their focus to high-net-worth individuals and institutional clients. By 2023, amidst soaring inflation and stringent monetary policies, Citigroup faced another pivotal moment. The bank continued restructuring, seeking to regain its competitive edge. As the third-largest bank in America, Citibank is considered too big to fail. With the Federal Reserve's backing, this legendary bank continued to endure.